Hello and welcome to Capital Market Live on Channels Television. I'm Will Ibang. First things first, let's check in on the markets and see how your stocks performed for the week. We begin with Europe, where markets nudged higher on Friday as stocks attempted to rebound from Thursday's sell-off, with the outlook for monetary policy still firmly in focus. The German DAX closed on Friday, rising by 0.76%. The UK's FTSE 100 rose 1/3%, while France's CAC 40 climbed by more than 0.5%. Investors have grown increasingly concerned that the US Federal Reserve will continue to hike interest rates despite signs of slowing inflation. Now, markets in the Asia-Pacific traded higher on Friday as investors digested Japan's inflation data. Japan's consumer price index rose 4% in December on an annualized basis, the fastest pace since 1981. The Nikkei 225 gained 0.56% to close its session. Hong Kong's Hang Seng Index rose 1.6% in its final hour of trade, and the Hang Seng Tech Index climbed 2.63%, leading gains in the region. Mainland China's Shanghai Composite traded 0.76% higher to close. Now, stocks rallied on Friday to finish the week strong after briefly losing the momentum of the January rally. The Dow Jones Industrial Average added 1% to close at over 33,000 points, while the S&P 500 advanced 1.89%. Both indexes snapped a 3-day losing streak. Meanwhile, the Nasdaq Composite rose 2.66% with help from Netflix and Alphabet to close the day above 11,000 points. The Nasdaq was also the outperformer for the week, posted a 0.55% gain and its third positive week in a row. The Dow finished the week lower by 2.7%. The S&P posted a 0.66% loss, both breaking 2 weeks win streaks. All of the major averages are still in positive territory for the year. Now we head to the domestic equities market, where market traded slightly higher this week as investors continue to take positions in bellwether names despite sell pressure on Dangote Cement. The all-share index inched higher by 0.16% week on week, settling at 52,594.68 points, with year-to-date standing in positive territory at about 2.6%. Activity levels for the week were negative as trading volume fell to 1.24 billion units, while value declined to 15.67 billion naira. Sectoral performance was slightly mixed as the insurance and oil and gas indexes advanced, while the banking, industrial goods and consumer goods indexes declined. International Energy Insurance topped the gainers chart for the week, while livestock feeds led the losers. Now, the trio of Veritas Capital Assurance, Sterling Bank and GT Gold contributed 48.82% and 13.53% to the total equity volume and value traded in the week. Now, similarly, the NASD OTC Securities Exchange Index, as the unlisted equities market, closed the trading week in positive territory. The unlisted equities index rose by a similar margin as the NGX ASI to close at 0.16%. The exchange gained over 1.4 billion naira in value. However, turnover was lower. Volume traded fell about 2% to above 24 million units, while value traded declined by 24.1% to close at 41.71 million naira. Niger Delta Exploration Production PLC topped the gainers chart for this week, while Friesland Campina Wamco led the underperforming stocks. At the same time, we saw Geofluids and UBN Property PLC among the top 5 stocks traded by volume for the week. Now, joining me to review market activities is Mr. Ambrose Omodion, Chief Research Officer, Invest Data Consulting Limited. Always good to have you on the program.
That's why we again.
Mr. Ambrose, we've seen quite a choppy session for the week. Positive, negative, positive. We're wondering if investors can actually make up their mind. But this is the week actually still closed in positive territory. Would you say what are the driving factors, driving investor sentiments in the market at the moment?
Actually, investors understand the market trend. January has been only a good market for our market down here in Nigeria compared to other matured market. And that trend is still suffice, is still on. But what we saw last week was just a mixed trend. Despite that, we see more than the 39 stock closing higher. It tells you that the mixed sentiment you saw or mixed trend as a result of what investor taking profit and also cautious trading ahead of what the MPC meeting and also election also coming closer. But I believe that this trend or positive trend I've seen in the last 3 weeks now will continue until the end of the month of January. But February being the month of election, I expect that closer to that election period, the same cautious trading that we just experienced will also come up. We want to watch to see the outcome of the whole exercise. But I believe that if we get it right, it will be good for the market and also for the global, for the economy in general. But for me, what we saw last week was a good one. Market still closed positive, despite the profit taking and also the kind of cautious trading. And don't forget that profit taking is necessary at this time. Okay. Market has started rallying since the month of November, December. Also, by this time, if you have made profit, this is not the time to say, I want to hold on to my profit. Nothing as paper
gain. Cash out the profit.
Exactly. And also go somewhere within the market or that store that have not moved because some stocks have moved, some sectors have also gone up. As we speak now, if you look at the whole indices for the market, the sectorial and the market, I can tell you that the consumer price index is still also leading the market about 6.78 year to date. I can tell you, if there's an index giving you that, what of the stocks in that index has returned a higher? For me, taking profit is part of the market at any time.
So you still expect cautious trading, as you mentioned. Election is around the corner, so investors will be weighing the stocks or what they should be buying or investing in at the moment. Now, talking of what should be happening next, we see MPC is scheduled to hold next Tuesday. What do you think investors are going to be focusing on, especially with expectations as to will the CBN hike interest rates or not?
For me, you can't do two things at a time. We're already trying to redesign the Naira, call money out from wherever they are back to the banking system, to the bank cover. And this time you can't hike rate at the same time. Also, if you look at the indices that they are using, most of the time inflation have been the guideline for any central bank of the world to kind of checkmate inflation. If we're seeing inflation slowing down, yes, on month is each but for year to year we saw a slide down. But I believe that this also informed that for CBN, I told them to leave rate unchanged.
Do you think because of the deceleration we saw in the month of December, do you think the CBN is going to pause?
Not just because of the data, but because can't be two things. We are calling money out from, we are doing Naira redesign. We are giving deadline, 31st. You can't do all this. You need to allow one to, give you, a direction where we are going before you can. If you want to increase rate, you kind of chop the economy. Economy is already slowing down. If you increase rate in this one, just a side patient. If you are done with also, don't forget for me, this decline was showing me, it's not for me, it's an artificial.
Because Naira design, you use mop up cash outside and bring it back into the banking system. So you expect the CBN governor to allow that
to rest. We are giving already a deadline 31st for all to bring back. If that relax, then after the month of January, you know where inflation is going. Because I tell you, the December that slowed down for me is still artificial. That means you want to see really at the end of the month of January, because with all this increase in energy, especially increase fuel again, we know the cost of transportation, price of goods will start rising again, because moving your goods from the farm, any movement you are going to pay even with your nose because of increase in fuel and other energy. For me, let's just side patient. We'll use with the word they use the money redesign and the current amount to wait and see the impact of this adjustment between now and end of this January. Then as from March, you can be thinking of increasing the rate and all those. That's what I expected. But if they want to increase at all, it should not be more than 25 basic points.
Okay.
Because if you take it to 17, you are choking the economy because cost of borrowing will be high. No, we are saying that unemployment rate is high. If you are increasing rate, business will also be falling, and that will also reduce activities in the economy.
But if they increase rates, people are going to put pressure on the equities market because people are going to move to the fixed income space because of the higher yields. That is for the financial market we are looking at. But we are looking at also the economy that will produce what the financial market will also deal with. If the economy is sleeping or is slowing down, what the financial market will do, you need to carry both the economy and the financial. I agree with you that what calls circular flow of funds.
if you hike rate, one will look for where it is, rate is high and with a less risk. We'll agree. But now, let's balance it, not only for the financial market.
Okay, so we saw a rally now, is like a momentum in international energy insurance. Now, this company has been made losses for about 9 consecutive years. Before, it was bought over by Northern Berger. But in 2018, NGX suspended the trading on that shares, but it has lifted the shares now.
Okay.
And we're seeing, we saw that rally in the week's performance. It closed over 28%. Are investors now bullish on this? What is happening to that? Is there going to be any minority takeover for that stock? But right now, the stock is moving really quickly from 38 kobo to about 49 kobo.
Within 3 trading days.
Just within 3
I
trading
agree
days.
with you, but yeah, investors also should open their eyes. You said so that there have been the company has been like a memorable before now. Then meeting up to submit their report, they have met the requirement for post requirement. They have lifted their activities there now. But the good thing that the news in the market that Northern advisory portfolio or service are entering into the company to take 100% of the company. It doesn't mean that both the minority, everybody will be taken off. That means they have to. And at the last AGM, this was approved for this takeover, and also they've gotten a SEC approval, to the takeover around the 1 naira 60 kobo. But the thing that investors are still not clear of that, as to speak now, there's no date for the takeover scheme to to start on or to kick off. That is why.
So is this deliberate? Is this deliberate from the from
regulator
Northern Berger or ENI? I mean, are they waiting for investors to buy off the shares or to buy off what they have in the market at the rate they're getting it now instead of buying it at 1 naira 60 kobo? Is this a deliberate move?
I believe that before the regulator, like SEC, will approve such, date to be attacked. But in the publication was seen, or the notification was seen, date was not stated then when the scheme will take off. But it is made clear that there's takeover. That means that the minority shareholder will be kind of paid 1 naira 60 kobo. And for a stock that you bought around for me, it's not really something that is fantastic people should watch, because if you remember, this company have done share construction for more than 3 times. No, this is a stock that touched as high as 5 naira before coming down. But for those that enter on this price of 4 naira 49 kobo, for me it makes sense. If that takeover is coming and date comes, they will guide you. But I believe that what we are seeing now is some people more likely want to take advantage of information to mob this equity now ahead of the date and everything. No, that's what we're looking at. But for investors also, don't forget that insurance sector is becoming attractive again. Okay. There are also this international energy being into energy insurance business. You know, energy is a big business. That is good. And also the reform we're seeing in that sector, the capitalization in that sector, will also be a plus for them. I mean, if you are entering for long-term investor, there's nothing by there. Don't forget that at the beginning of this year, we saw about 200 premium on insurance. For me, it increased the premium by 20%. That's also will impact the bottom line of insurance company. That means there is prospect for insurance company, but not immediately that you want to jump in. Like you can take long-term or medium-term for insurance. But for me, there's a prospect in the industry, and also people can take advantage of this information. Yahoo International.
So they should just hold off from buying or selling off their shares.
No, as we are sharing now, those that owns will not be rushing to sell. But if you need money, not
So now, we also saw that MTN is set to allot the incentive shares. You know, they had an offer that was in 2021 where they sold out about 575 or 95 million shares to Nigerians. Now, they are set to, they say they want to now give the incentives that they promised then. Do you expect a rally in MTN as a result of this? Yeah,
might not see much rally, but might see kind of improved activities there. But the good thing is that, one, they are keeping to their promise. And also, during the offer, they told the investor that if you can buy the stock and keep it for 1 year without selling, these are the the incentive you are going to have from doing that, and which they have come to it's going to end by 31st of January. If you keep your ball, there's one thing they put a clause there. That means if you have bought and you have sold. And if you don't have up to 20 units left in that,
so anybody who has traded their stocks should be counted is exempt from this incentive.
If you still have like 20 left,
so maybe they should just go put back 20 and just keep it.
For me, it's good for us to know that that company or the tech industry is evolving, and there's a lot of prospects in that sector. With all these, the 5G, going to mobile banking and all those stuff, I see that the bottom line or their cash flow will improve. And when the company cash flow is looking up, it's about to impact their price going to the future. For me, if you are taking a position in MTN, wait for their dividend, wait for the bonus they're going to give you, and make money.
No, it's very interesting conversation there. Now, after the break, focus on the outlook for the consumer goods sector in 2023. That conversation right around the corner. This is Capital Market. Welcome back. Now, projections, forecasts, however you may relate to it, have been rolling in this year for businesses and Nigeria's economy in general for 2023. And of course, the equities market is not left out. My guest in the studio, Ambrose Omodiun, is going to be analyzing this outlook on opportunities for the consumer goods sector this year and what Nigerians should expect. So, Mr. Ambrose, we're talking about consumer goods. You did mention on consumer goods index being at about 6-point-something% earlier.
In the positive
territory. This is good news. And so does it set the tone for what we should expect for the year 2023 and for businesses in that sector?
Yeah, actually, I believe that we expect to see a mixed sentiment or trend for the consumer goods, or call it the fast-moving goods. I think that investors should think that last year we saw a pattern, and that pattern was the extension from after the COVID-19. We saw that the consumer kind of increased, the consumption rate increased, despite that we were coming out from a closed door, because door were open because we were all concerned for a particular time for a period. But when the door was open, everybody came out, and also most businesses also expand their production, and there was income to go around purchasing these goods. But when we start seeing a hike in interest rates and all those stuff, that is where we start seeing inflation jumping, we start slowing down. But the good news is that most companies in that sector were able to pass increase in price to their consumer. And also, like I said, we're going to see a mixed trend is because as they are passing this cost to their consumer, they're having a hit on the FS market, low purchasing power, and at the same time also cost of energy. This is going to eat into their own activities. At the end of the day, fine. As at last year, we saw about an average of average growth or expansion in their top line for 30%. We are seeing that in this 2023 might slow down to below 15%, just because of what this first person I just mentioned, the FS, the purchasing power, and also the operating environment in terms of cost and all those stuff. For that, this mixed trend will continue. But don't forget that in this same year, we'll have two governments in this same year. Why two government? By May 29, the fourth government will be going out. What new one is coming? More
like a transition.
New government. That means in this, that means policy, reform and all those will come. That's why I say it's a mixed, outlook for them, because when you are doing reform, you're going to impact some sectors and some industries. Depend on the tune of your reform and where we are going. That's why I said we have seen factors that will militate on them, or also factors that also push them up. That is why I said this mixed trends expected. But for investors, your focus is on what? On the earnings of this company. Despite all these things that happened in 2022, most of the company there also, you can see their top line are 2-digit in that industry. It tells that something is working for them. Those are able to push their cost. But there's a level you can push your cost to your consumer. Because when you are pushing your consumer, your volume of production also start coming down. And when they're not buying, that also push you to a decline or a red position. That's why you need to be very tactical at this point. Because if you say, because of cost is high, when I produce, I push my cost to. If, for example, you are buying, let's use next class example, you are buying, the cartons of Milo, let's say 2 in a month before. But with the environment, you can start to buy 1 carton now. And if they are producing more than the world, the 2 will be on their shelf. That means the expansion in terms of volume will also reduce. But I believe that able to manage. That's why I said that mixed trend is what we expect in that industry.
Talking about mixed trend, we've seen some projections, especially for Forex, from the Nigerian Economic Summit group has projected that the Naira is going to devalue to about 500 Naira to a dollar. That's in the official rate. If that happens, and this is because of a depletion in the Forex reserves, if that happens, could you paint a picture for us how it's going to affect businesses in the consumer goods sector?
There's what we want to look at this time. If you're looking at official rate is not driven by demand and supply. If you want to adjust to 500 or even 600 to close the gap between the black market and official rate and have one single exchange rate for Nigeria, that would be nice. But if you want to see, push up your official rate, but people are still going to the black market, the parallel market to get this because that is where they can see volume. But if we can provide the dollar, and also don't forget that if by God grace this year, this oil price we are seeing improving, also sustain, we have also increased our productivity in terms of our output in terms of production of crude oil. We know we are still dependent on crude oil more to get our result to our FS. If we sustain that, that will also impact the bottom line for CBN to be able to manage it. But I believe that moving it to 500 is not a problem. But is it available? No, if you are going to know the forces of demand and supply to determine the, and move it to 500, and there's no black market, and in between there, you can close the gap, but that would be nice for manufacturers because it's going to trigger on everything because most of the companies that has to import their raw material that have not done backward integration is going to affect their own activities at the end of the day. I believe that, like I said, these are the factors that will drive the activities in the manufacturing sector and the economy generally. But for those that you said that are in financial market, we know how to play. But for those that are important to produce, I know that it is when a company has done production, makes sales that we can see a better earnings that will, that will drive their price. If all these are constraints for them, but I believe that investors should look at not just marrying a name or look at a company that is able to put all these things together and also give you good results. That's why I said there are some companies that are well run or managed in Nigeria that even with all means we are seeing a better number that will support their price. These are how to be. Don't just because they say, oh, the economy will be missed or there will explode down the economy, there is recession fear across the globe. Even in the midst of recession, there are some industry and sector that also give you good return. That means for every investor, as I think that we're going to see a mixed sector, a mixed trend of or sentiment for the output for consumer goods, there are still companies in that sector that you can still put your...
So what are these the companies? Could you name some of the companies and probably their performance that could make investors put their money in and say, okay, even if there's a global recession, my money is safe, or not safe, but at least they can still make positive returns or good returns from their investments?
You know, I said that any business that's into food-related business, we're going to sustain your work activities because we can't do without food. And that's why they call them fast-moving consumer goods. If we are there and we know that we're going to consume, we're going to reduce our consumption, but still because with life, you need to consume. You know that activity will be there. And what you know, you look at the numbers. What is it going to support their price? But as we speak now, a company that past performance of any company is not a guarantee of the future. But you look at what is the prospect in that company to continue that number.
So are there companies you want to talk about and see their prospects?
For example, now let's take example for like Dangote Sugar. Okay. Remember that international market sugar is still high, and don't forget sugar here is for industrial use and consumption. Tell you that there is high demand for sugar. That means for other things, even for some drugs and for activities, sugar is involved in one way or the other. That means for that company, that sector or the company, there's prospect for their earnings. I believe that will also support Dangote. But if you also look at their earnings so far and the chart, not this, people think of earnings alone. Earnings might be good if the market sentiment is not in favor of that company. Price will not go up. That is why you want to look at, if you look at company earnings, you look at the share initial of that company, look at the share structure of that company. And say that what is sentiment? Because when number hit the market, people think that, oh, it will go up. If the share is in few hands, it can sustain an uptrend. For example, let's say stock like Boa Food. You know that Boa Food, is more in one person's hand. You look at the shareholding structure, the float is less than 15% float. That means if that company releases results, they're going to pay good dividend, price will move up, it will be something company ready to sell because it's in few hands. The chunk of the stock is in 1% stand. That is why investors look at which company has really specialized shareholding structure, which has it, that you have your own goal that will guide you invest in such a company.
So are there other companies that investors should look at? Because right now, a lot of stocks are being sold off, and investors, especially because of the global recession fears, people are trying to get their money and put it in a safe haven. So what other stocks, or what would you say strategies would you say investors should employ in this period so that they can better manage their portfolios?
The easy thing to do for investors that I've shown it, one of what I sent to you, if you look at what we call the earnings of this company, as at third quarter, what is the position of this company earnings and what did they did? What was their number they did in 2021? Have they surpassed their earnings as full year? If you look at this consumer goods stock like Cadbury, stock like Dangote Sugar, even Nestle, you can see that their performance, as at the third quarter has surpassed what they did in 2021. It tells you that at the end of the year, you're going to see a better dividend. And every investment is against the future. And this dividend is what we're going to drive the price. When corporate action comes to the market and you see a good number and a good payout, price will move up. That's why investors don't need to panic. Just compare what they have done to the third quarter. And also by next week, we'll see unaudited account of these companies. That only that will give you insight where they are going at of full year, because you want to see only that, oh, difference between audited and non-audited is very small, because audited that their external auditor have not looked at it. When you look at it, adjustment will be very small, but you have seen their earnings for unaudited account will give, oh, this company has made about 2 naira. No how, at the end of the day, if after adjustment 180 or 195, able to pay me higher than what they paid last year, you start pushing ahead. You don't need to see the number fill. But now you give yourself that when the corporate action come, market react positively. Like I said, you look at what the structure in tech analysis, what we call it value area, where the support level and resistance level as at now, where the company was expecting the number. It's going to be a breakout. It's going to be breakout. You like to have to position so that when there is a number a breakout, you take your profit. That's for traders. But for investors, you want to look at what the dividend and who your dividend. It's a very
so we're looking at good performance or reports from earnings reports coming in, because we've already seen some early flyers coming in, and so market investors should position themselves for
like you just mentioned the early flyer. We just saw about 2 releasing the unaudited account from Universal Insurance and Living Trust. They will expect that those early flights that will come with corporate action will come from UCAP, Zenith Bank, Dangote Cement. They come in February, and when February, that will change the narrative of the market. But good thing is that there's a coincidence now between election is there, earnings is there. I tell people that don't panic if you are income investor. Even there's election position for your dividend, because election will come and go. Even though they want to postpone it, the election will come and go. But for those that are traders, have to be very careful.
Okay, traders have to be careful. Thank you so much, Mr. Ambrose Omodian, Chief Research Officer, Invest Data Consulting Limited. Many thanks for your time this evening.
Thanks for having me.
And that's it on Capital Markets. Do join us same time next week. Don't forget, you can watch this again on our channel's television page on YouTube. Also follow us on our other social media platforms to get updates. I'm Will Ibang. It's bye-bye for now.